So hello and welcome. Well, you're looking at the 1 week time interval of E-mini Nasdaq futures contract, September 2024. This candlestick right here is the 3rd of September, and the one before it is 2nd of September. Now we'll look at how price traded. It's basically a journal log of trade on 3rd of September. Now we have a price trade down into the new year opening gap and creating relative equal lows here, which means we have sell side liquidity resting below that low and that low. And then we had a long rejection from the new year opening gap, creating this week. Now that point is a consequent encroachment of that week, and then price traded back into the 1 week order block before proceeding back down. Now this low is the previous day low of 2nd September 2024. This is the order block 1 week where price traded back into it. Now if you notice, we have the body of this candle opening directly on the consequent encroachment candle, going to close in the volume imbalance, in this case the sell side, the CB, and also that one. Our price goes to close over the body, creating a fair value gap, and then rallying higher, taking out short-term high and into the 1 week order block. The price now traded down back into the buy side, imbalance sell side, inefficiency. Now going lower in the 15 minutes time interval, we have the open 3rd of September right here. Price created buy side liquidity, sell side liquidity, then traded above the buy side liquidity. I was resting below here, sell side liquidity. So sell stops, people that went by right here, traded below it, came back into this 15 minutes CB, and then market side dropping. That candle right there is 1430. The opening bell in difference to the settlement of the opening range, so that gap we rallied lower. I was expecting them to at least come to the consequent encroachment of that gap, but it kept going lower. That signaled to me that it was going to be a heavy day. Closed, opened here, came to the consequent encroachment of that volume imbalance one day, and traded lower. 15 minutes CB came up, tapped below lower portion of it, and also this lower portion of it, trading below that previous day low and into the daily fair value gap, the basic. Now this is 1 minute time interval. This is where the market broke above buy side liquidity, swept sell side, traded back into that CB. This is the opening bell in difference to the previous day settlement, previous trading day settlement. That's the consequent encroachment. Price kept going lower, and I think yeah, that was a high probability fair value gap there. Came back to it for support, the trading there, and then that's a little fair value gap there. We also have this fair value gap. This is a reclaimed fair value gap because it was bearish, broke above it, broke below it, and then finally into it, respected it. So that's a reclaimed fair value gap. Then we have price breaking below, coming back to the other block here, and that's 15-minute sell side imbalance buy side inefficiency. We had that little touch down and then kept trading lower. And then this is CB, traded into it, broke lower, traded into it. This is 1 minute CB, broke lower. 1815 to 1910 macro, we had that retracement into another block, and then once more into the last CB, 15 minutes, traded lower into the daily fair value gap. Okay, that's it, and until I talk to you next time, stay safe.